Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, August 2nd, 2019 edition of DecisionPoint with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, welcome to our show. And for our regulars, of course, welcome back. All right, Dad, how's it going today? I haven't had a chance to talk to you much.
Yeah, pretty good, and very interesting week we had. When my article this week title is "Did Technical Analysis Was it at all helpful this week?" And so I think it was, but one would wonder.
Right. It has been a little bit of an interesting up and down.
Yes, been news driven.
Yes, absolutely. And that's noise. And that noise usually gets in the way of our analysis. All right, well, we're going to look at the broad market indexes. I have the price relative chart with the S&P 500. Weekly review, we'll look at those scoreboard indexes. DP market indicator chart pack is what I'm going to look at, is in particular the VIX. We'll be able to see the VIX on some of those major indexes and get a feel for what's going on across the board. I'll look at the DP indicators in the ultra short term, and intermediate term. Carl's going to cover the dollar, gold, oil, and bonds with the daily and weekly charts. And then as our bonus, of course, it's going to be Carl's grab bag, but I also added the golden cross indicator. We've sort of named it now, Dad, and might as well start putting it out there.
Correct.
All right. So let's go ahead. We're going to look at the DP scoreboards first. As you can see, as far as the sectors go, XLE did print a new intermediate term trend model sell signal. The reason it is a sell, when the long-term trend model is on a sell, 50 below the 200, and then you get a negative crossover of the 20 and the 50 while it's below the 200-day EMA, you're going to get two sell signals. So we're looking at energy really lagging here, but not a surprise watching what's been going on in the market and the sectors as of late. As far as our DP scoreboards go, I added quite a few signals as of late. We had a bunch of PMO sell signals come in on the major indexes. And then yesterday and today, we ended up with neutral signals on the short-term trend model. And that's basically our 5 and 20-day EMAs. When you get that negative crossover, it becomes a neutral if it happens to be above the 50-day EMA. I'll show you that more closely on one of our charts. And let's go, of course, and look at some of those charts. All right, so first off is the relative chart. These are the major indexes and how they are shaping up right now relative to the S&P 500. And as you can see, we're starting to see a little bit of a lag in the technology sector. Dow Industrials are rising slightly, I would say, as far as their price relative to the S&P 500. OEX is pretty much performing about the same as the S&P 500. The mid caps, we're starting to see a nice move, relatively stronger than the S&P 500, but as you can see in the thumbnail, this week we're starting to see some underperformance, but overall still trending higher off of the relative lows we saw in mid-July. And the S&P 600, IJR is the one we're looking at, I would say it's still in a rising trend off of its relative lows for the year. So I think that's a good thing to see these mid and small caps participating. Trade wars, that sort of thing, might see the mid caps and small caps perform a bit better as they're not quite as exposed overseas into the dollar. So we'll have to see if that.
Erin, let me make a comment on this.
Sure.
I think it's good to look at the last week, what they've done in the last week since the S&P has changed direction, at least in the short term. You notice that Dow got a little stronger this week. The Nasdaq 100 was actually weaker, so it means it was falling faster.
Mm-hmm.
OEX about the same. The 400 and 600, they ticked down, both of them. So basically, they're showing us if the market continues down, that they will probably lead.
Oh, the lead to the downside.
Right.
Yeah, we can see. Well, we'll see, as they say.
Right.
Let's
It's
see.
kind of early, but I mean, it's
Exactly. This chart I thought I had updated, but it's looking a little weird right now. And basically, I'm looking at all of the indexes in their price charts here. So you can get a feel for really the main thing you should look at, I would say, is the fact that the IJH, the mid caps, and the small caps here, you can see not at all challenging their all-time highs, whereas you can see that even the equal weight for the S&P 500, and of course the S&P 500 has been really pushing off of those and creating new highs, all-time highs. You can see the Dow had been leading quite well and is, you know, it made some all-time highs on its own, and has the Nasdaq. All right, the global markets, I went ahead and switched this chart up a little bit, and well, let's see. It doesn't look updated right now, so that's okay though. I don't know what happened to all my annotations. They're just gone right now, but I moved these to the actual currency, you know, the DAX is here rather than the ETFs, just so we're looking at apples to apples. And the only one, though, I have to say is I could not get the FTSE. We don't carry that now. So at this point, I had to use that ETF. But the idea is to look at where these global indexes are in regard to their previous either all-time highs or their, you know, October, November highs. And you can see we're still in a declining trend for most of these. Nifty managed to get a new all-time high, but has been trailing lower. And of course, Shanghai moving mostly sideways right now, still not at all challenging its previous all-time high back here in 2018. All right, let us look at the Dow. This is so strange. It looks like all of my annotations are completely gone. We will just move right along. As you can see, we were already in a declining trend here for the Dow. And we now have dropped below the support, I would say, at this April top. That's what I was looking at, possibly around here at 26,500. And we closed below that. We continued lower. We've now penetrated that 50-day EMA. And like I said, there's your 5-day, 20-day EMA negative crossover above the 50. So there's that neutral signal I was talking about for the short-term trend model earlier. Lots of volume too coming in on this decline. So I was looking at it as a possible selling initiation on Wednesday, and boy, it's nice when it does what I say. All right, PMO buy signal, but you can see we've got tops now on the weekly chart for the Dow. And again, very serious support now has been broken. Nasdaq 100, technology here. We had the rising wedge. We dropped below it. And as you can see, traded mostly above that 50-day, below that 50-day EMA. That's showing lots of weakness here. PMO sell signal also came in, like I said earlier. And look at that OBV. If I had my rising bottoms trend line here, you could see that that's really not bullish for sure. All right, the weekly chart, you can see we did get that bottom above the signal line, but now we have ticked downward. We'll have to see if this really amounts to anything. I mean, right now you've got obviously this very large decline. It is still holding out above its 17-week moving average though. Daily chart for the OEX. All right. Also, big decline was in that rising trend. Here you can see that latest PMO sell signal. And again, you've got that breakdown of that rising bottoms trend line on the OBV. Weekly, not much to say here, but we did lose that support. S&P 500, all right. I had pointed out on Wednesday possible double top. That would have been the confirmation line. It had broken below it, but it had closed above it. So I still was looking at it as an executed double top. and it did continue lower. I did the measurement, and this right here, pretty much about where we stopped, is where that minimum downside target of the double top. We always say minimum. You're supposed to expect at least that much of a drop, but that does not mean it's going to hold up as support. And you do see the PMO sell signal. We had a lot of sideways move, a little bit of indecision. And right now, the OBV, that rising bottoms trend line, is kind of holding up here. But, again, when you see this kind of volume come in on a decline, that's really looks like a selling initiation. Weekly chart, again, breakdown below that important support there at those previous all-time highs. And as you can see, we've got the PMO has turned down on the weekly chart, but it is a tick lower. So like I said, we really need to see the follow-on movement. All right, our climactic indicators. And this is what I had been talking about on Wednesday. We had these extremes come out, these climactic moves on breadth, and that was accompanied by that first penetration of that lower Bollinger Band. And, typically when I look at it, the days before were decline. So a lot of times I'll consider it an exhaustion, but in this case, it looks so much like what we had back here in May, and those punctures can persist for quite a while, and that's what I think we're seeing right now, waiting to see that VIX pop back up inside the Bollinger Bands and see either a climactic negative look or a climactic positive breadth. And then we can start looking for a buying initiation.
Wait.
Yeah.
Wait. It's worth noting is on Wednesdays we had the breakdown, and
right.
that was I saw that's a climax. I'm not sure if it's exhaustion or initiation. And then the first part of Thursday, you noticed tail was where on the bar, the candlestick, that upper tail was where it spent most of the day. The up
here, right?
Yeah. So then it looked like the day prior had been an exhaustion, and of course, then the announcement was made about 10% more tariffs than China, and that killed it for the day.
Yep, news driven. But the thing is, I mean, you look for these bottoms, especially when they puncture that bottom Bollinger Band, but it doesn't mean that it's just a one-day thing. Like I said, back in May here, when we started to see that decline, you had plenty of readings below that lower Bollinger Band. So
we're well into that type of an operation right now. So another couple of days, we might see it bounce up. But again, it doesn't mean it's the end of the decline, because you see you got that bounce in May to the top and then continue down. So that's kind of what to look out for at this point.
Agreed. Short-term indicators. I mark in green where we had the oscillations above the zero line, because obviously that's where you want to be. That's where you can see that internal strength in the market. And now we've gone well below that. We are sitting in oversold territory, but at the same time, I mean, we've seen much lower lows, so it could certainly move lower. But this is maybe the time, depending on what we see happen with price here, that might be the time to start looking for that move back to the upside. But I don't know about you, but I'm looking at it as somewhat oversold. I think we could go even lower.
But look at May. Look at the indicators in May. There you go. But right now we're in the first leg, and we could have an up move and then another down move before this is over. So we're oversold now, and we should be looking for a bounce in a couple of days.
Yep.
But it doesn't mean it's over.
Yeah, exactly. All right, intermediate term indicators here. Looking pretty ugly. I had noted that we also were looking at quite a negative divergence going on here before we had that, we'd had that drop, but now below the signal line, but now it's moving even further. We're still above the zero line, but honestly, that worries me because there is so much further lower that these indicators could go. If we can get it to turn up over the zero line, then I'd feel a lot better about the intermediate term, but right now, not so much. All right, I'm going to look very quickly at the Vix Chart Pack. You can get this, you just go to your account in there and you can manage your chart packs and download them. This is in the Market Indicators Chart Pack. And basically, this is the list of all of the volatility index charts that we have already pre-made for you. So I thought I would just quickly flip through some of them so you can see what's going on as far as the VIX across the board. As we've already discussed it on the S&P, and you can see that really low puncture of the lower Bollinger Bands. Now, right now, this is set up where it is not inverted, and well, I meant to fix that. Oh, it's an S&P one anyway. That's right. I was going to skip that one anyhow. Okay. There it is. Similar situations here. These punctures below that lower Bollinger Band. In this case with the OAX, it was completely beneath it. We didn't even see a move inside that band. It's really going to start stretching now. Here's the Nasdaq. Again, similar situation.
You haven't put it on the log scale.
No, these are the way they come in the chart pack, and I have not, but that's, you can do that down here.
Recommended.
Yeah, I'll fix it later. Okay. That was Russell 2000, similar. The Dow, this is not flipped. So you can see again, we've got those punctures on the outside of the Bollinger Band. Okay. And the gold volatility index, I think this one's pretty interesting. And this one is inverted properly. So we're starting to see some increase here. And, we'll watch and see if we get that puncture below that band. And then finally, we actually have one as well for crude oil when it comes up.
So did you get an extra 15 minutes on this show?
Yeah. All right. And again,
not leaving you much time here.
Yep. Go ahead. Take it over. I'm done.
Okay. Okay, here we go. We've got the dollar broke out of this rising wedge just briefly, and it's going back down again. Oh, isn't this odd? My annotations disappeared as well. We have a long-term line of resistance support right here, and it hasn't been able to get away from it. It did break out, but it's come back to it.
Yeah, it's just one of those days.
Okay. Gold is still pressing higher. Lost my notations on this one too, but we've got kind of a rising flag here. I don't like rising flags because they're kind of weak formations, but I'm still encouraged by gold. Has been, I think it's up like 42% since the low over here. Better illustration of that support resistance line. Now it is support, and again, very encouraged with the way gold is behaving. Oil was choppy this week. On Thursday, it dropped. And I was wondering, I couldn't figure out what was going on with oil. And somebody said, well, it's a perception with the trade difficulties that demand will be down. So that's the external reason why this is happening, presumably. But I expect it to, let me look at the weekly chart. Okay, the weekly chart, we're in the middle of the trading range. We're also coming into the apex of the triangle, and it's going to resolve one way or the other. I don't think it matters one way or the other. It's going to remain within this trading range, I believe. Another exciting chart. We get an interest rate cut, so bond prices are going to go up, right? I think they probably have done the limit on that move. Maybe do some consolidation now. Okay, the weekly chart, you see long-term resistance at this point. We're above that now, and I would anticipate it will stay above that for the foreseeable future. Can't pass up the yield array chart. I hadn't updated for today, but you can see all the yields are coming down, and I'm not sure about the inversions at this point because they're so close together. This one is always fun to look at. It's just whatever we had back here, it's different than what we're going through here. Completely different environment each dip in this thing, and now we're heading towards zero interest rates. Don't know for sure on that, of course, but that's doesn't look like it's going to be any different to that. Let me go to the Golden Cross Index. Basically, I like the name because it pretty much tells you that that it involves 50, 200-day moving average crossovers, and the golden being upside. So right now we're sitting at an update for today, and 71%. It's topping out. It tends to be a little wiggly for some reason, being long-term, but it does zigzag a little bit. But it's topping out, and that takes a little longer for that, obviously. But you see here the IT trend model, which is the 20 moving above the 50, and percentage of that is still pretty high among SP 500 charts, but it's fading for sure. Going along with that, we've got the bullish percent index, which is the percent of buy signals, point and figure buy signals for index components. I said some weeks ago that when these BPIs were still advancing, I said once they break down, then we should be, looking out below. And you see with all three of these major indexes, that has happened. Something new, I put up the Pmo Analysis Chart. We haven't talked about this for a while, but essentially it's percent of PMOs above zero, with PMO buy signals, and PMO rising. Rising is obviously a short-term issue, and the percent above zero is a long-term issue. You notice we've got some a divergence here, and again here, and again here. But this gives us a good idea of the internals, particularly relating to price. Similar to that, we've got percent of stocks above their 20, 50, and 200-day EMAs. I like this one better because it's pretty definitive. And whereas a PMO can show when the price is getting internally stronger or weaker, this just shows definitively that it's on a buy signal or not.
Yeah, the negative divergences on that chart are
yeah, quite profound.
Mm-hmm. Yeah, I wrote my Chart Watchers article on that last week. So if anybody's interested, you can find it in the Chart Watchers blog.
This is, negative divergence. Fine. It got up here over 80. This is, slightly lower than these, but this is almost as strong as this, but it is definitely showing weakness. Wanted to revisit the technology. Sector. I did an article on this a couple of weeks ago, I think, and here we showing the bullish percent of the stocks in the technology sector, and you can see the weakness here, and you can see relative strength relative to the equal weighted is actually getting lower. That's interesting. So the equal weight, no, I think I've got that backwards. I think it shows equal weight. The sector is going down.
Mm-hmm. Yeah, you can see how technology started to lag.
Right. Let's take a look at Bitcoin. This is why they call it my grab bag, because I can go in and grab something that I think we should take a look at. Parabolics breaking down, not huge amount. Here, actually doing some sideways movement and starting up again. So I'm thinking I should put a parabolic under that. Measure the next movement in that regard.
All right, I'm going to give you, I think we're going to have to close it up.
Okay.
We got about 40 seconds. So really, what are your thoughts about next week going in?
I think we're going to get a bounce. That's, I haven't had a chance to let it settle because preparing for the show here, I don't really get a chance to digest what's going on with the indicators.
Yep, but do go to the DecisionPoint blog, everybody, and you can read Carl's articles there on the Fridays, so highly recommend you do so. All right, time to thank all of you for joining us here today. Remember to complete that survey if you have a chance, because we like your feedback. We do air on Fridays at 4:30 p.m. Eastern. Have a great weekend and happy trading.